All right, what is up, everybody? Divine Hood here, coming at you with a weekend video. We're just going to cover Bitcoin, and I'm also going to cover Ethereum in this video because Ethereum did make some key moves happen yesterday, and I did not cover those in the altcoin video. So I'll go over Bitcoin and Ethereum today in the video. Not much new to cover. We're in weekend price action, low volume weekend price action. I expect next week on Monday, New York Open, or even maybe Sunday night my time, but Asia Monday morning to start doing real good, to start having volume pick up, and the price action should get kind of flowing again. So right now on Bitcoin, we are still holding. You can see this purple box here. That's that first support level. That's the anchored VWAP right here from the all-time high. That is the value area high of our bigger range. So if I zoom out here, our range since December 24th. So this lower price action here that we're in, we're still just in this lower part of the range since November 11th. We have a couple ranges we're watching. But if you look at this range here, you can see the value area high, the anchored VWAP, and then our very local golden pocket of our last high to low is there as well. I believe I have that already. Yes. So just from this low here on the hourly, our last hourly low to this high here, it's our golden pocket, our local golden pocket. Now, on Friday yesterday, we did break the value area of this range. We broke the anchored VWAP, and it was also the top of the pitchfork. You can see right here, this kind of a dark green line here. We broke it to the upside, and we're in the process of flipping it to support to see if we want to continue higher or dump back into the range and continue to range within this band. You see this green band, this green line is the upper part of the band. This lighter green line is the lower part of the band, where we also have the POC of our range. So we are looking now for it to either flip to support and continue higher to the 100.4 or even higher, 103, 104, and even higher, or we dump back down and we start coming for the lows again, or even make another higher low before continuing higher. So I'm going to go over just the recent development of today, kind of this price action here within this new descending channel you see I just made. So I found Bitcoin is trading. I'm going to go back to the 15-minute chart here, and we're going to zoom in onto the 15-minute. We're going to look at just this price action here, and I'm going to get rid of this range now just so that you can kind of see better. So we broke above. You can see this anchored VWAP. Just imagine that's where the value area high of the range that I just pulled from December 24th to present day. So that this purple box here is about where the value area high is. The purple box, the golden pocket, and the value area high anchored VWAP. So you can see that we're just trading in a descending channel right now. We're consolidating above. Now, descending channels do have a higher probability to break out to the upside. Also, we are in the process of flipping a major resistance into a major support. One other thing we can look at here, you can see if I take a just kind of like a box, support resistance box, our prior highs, which were here and here, are now flipping to supports. Our prior resistance is now flipping to support. So we're making that a kind of staircase type price action, higher highs, lower highs, higher highs, lower highs, higher highs, and we're making what used to be our old resistance here flip to support. So this is a healthy move for Bitcoin. This is actually looking like Bitcoin does want to continue higher so far. Now it's weekend price action. Weekends often have a lot of fake outs, and we are just trading within this channel. One of the things I am looking for us to do over the weekend, because we still have some time left. So if we look at, let me pull this over here. If we look at Bitcoin just continuing to chop, overnight and kind of for the weekend here, we can look for a chop down slowly to where the bottom of the descending channel is aligning with our first purple box of support, which is the bullish backtest of the value area high and the anchored VWAP from the all-time high, as well as our local golden pocket. And then we can maybe make a move up to break it and continue to 100.3, 100.4K, where we have a swing failure pattern into the top of the other bigger channel, which is this channel here, about 100.4. And if I zoom out here, you guys remember this channel I've showed you on many videos in a row. It is just this channel taking the first two lows of this price action up to this high. We came up to it on Christmas Eve, rejected to the dollar. We did get some wicks past it here. We got some price action dump below it, but that's because we needed to take those 92K flash crash lows on Coinbase that were kind of triple bottoms. And then we reclaimed it right away. We back tested it to support. We were able to flip the midline to support on Friday, and now we're continuing above. And you can see we're just continuing higher. We do have our big range. We're also right at the POC. We're flipping the POC of our big range, which is from November 11th to current day. Here, we're flipping that POC to support as well. Let me make sure I got this right on here, because I'm going to pull it to these lows here. Actually, we'll pull it right there. All right. So, yeah, we look at this POC here. We're flipping the POC and the anchored VWAP to support here. You can see it was acting as resistance on Thursday, bounced above it on Friday, holding it as support. Now we're just trading within a much smaller descending channel. So if I make that descending channel on this chart here, we're going to go into the 15-minute chart, and we're just going to look at the price action that's forming this range here that is forming above the value area high of our bigger range, because we're trading relevant price action. So we're going to go to the highs that we made yesterday right here. We're going to bring it to the high that we made today, and then we're going to bring it down to these lows here. And you can see this channel is being really nicely respected. Midline rejected earlier, midline here, and now we're coming back down to the midline in the VWAP right now. So this might bounce again at the midline, or we might continue down to the anchored VWAP and the POC of the November 11th to present day range, which is here around 97.4 to 97.5, where we can look for this to be a big support level to flip to break out to the tops, to the swing failure pattern of these last December 24th highs here, the swing failure pattern of this high, and it's also the value area high of our much bigger range from November 11th to present day. And we can look for a swing failure pattern into either the value area high or even to the top of the channel. So that's what I'm looking for now. Now, if you want to take this long here, you have to use proper risk management. So let's speculate on this. Say you're coming down to this box and you're going to see it hold, and you're going to want to take your TP1 up here at the top of the channel, and your stop loss, really to be a technical stop loss, you would want to put it like below these lows here or even below these lows. For me, I'm going to put it below the midline, because if we re-enter back within this channel and we lose the midline, we're probably most likely coming for these lows. Because if I put it down to these lows here, let's say I put it right down below these lows, you can see our risk-reward ratio is only a 2.13. Now, to me, that's not a good enough risk-reward ratio to try to scalp this up to the swing failure pattern. Now, even if that's a TP1, that's acceptable for a TP1. If you think we're going to go to that 1024, then you could. That's a 3.5 risk-reward ratio. That is good. I would definitely do a TP1 at this area, especially if we confirm this. If we confirm the swing failure pattern, you're going to want to close that long, because most likely we're going to dump back down. But if you want to take it all the way up to 1024, if you're bullish on Bitcoin and you think Bitcoin is going to keep pumping higher, you could long this with a TP at 1024, which is the bigger golden pocket. We got a naked daily up there, naked daily POC. We got a few resistances up there, a few confluences of resistance. But for me, personally, if I take this as a scalp, which I might take this as a scalp here, I would look to put my stop below this midline here. Or what I would do actually is, if we keep chopping down here over the weekend and we come down to here and we start to bounce, I might long after the bounce starts, maybe after a 1 minute break in market structure. If we break bullishly 1 minute, and then I would probably put my stop below that low that was made, and then I would ride it up to only this area here, something like the top of the channel. And then you'd have a 13 risk to reward ratio or whatever it is. You'd have to wait for your wick to close down here, because we might wick a little bit into this POC, maybe a little bit past the bottom of the descending channel. Sometimes we see fake outs like that. And then so you'd put your stop below that low that was created. And obviously you wouldn't be longing right there. You'd be longing. Actually, let me just delete this. You would be longing up here. Like, you know, once the 1 minute break of structure happened, you would bring it up to the top here, and then your stop would go below whatever low you had. So that's still a 5, almost a 6-to-1 risk reward ratio there. So that's an acceptable scalp to be looking at if you think this is going to hold and you see confirmation of it holding. Now, if when we come down here, we're going to want to see, obviously we're going to be seeing lower lows on the price action here. You'd want to be seeing higher lows on the momentum waves, which confirms bull divs. You'd probably want to see it on the 1 minute, the 6 minute, 12 minute, and maybe even the 15-minute chart. We're not going to have high time frame bull divs because it's just it's a scalp trade. So on scalp trades, you're looking for lower time frame divs to confirm it. You'd want to see money flow increasing, like on the hourly or 2 hourly, 4 hourly. That's what I'd be looking at locally for Bitcoin. That's your local trade to be looking at for now. If we do break down below this value area high again, so let's go over the bearish case here. If for some reason this support level doesn't hold and we break it to the downside, maybe we come to the midline and then we come back up to bearishly backtest the re-entry into our value area and we start rejecting from there, that could be a possible short entry level. So you could short the back test here. You'd put your stop, you'd have to put your stop above this local high here, and then you could bring it down. Now in this case, if we break back down, you'd be looking for, I think it was 94.5, which is our golden pocket and our pitchfork band support, as well as our December 24th to present day range. So the POC of this range here, I'll show you guys this real quick. So if we go from here all the way to present day, you can see the POC of our range is there. We also have the bottom of that pitchfork band on this chart, this Coinbase chart. The bottom of the pitchfork band you can see is there, and our golden pocket is there. Our high to low golden pocket pull is there. So we would have, that could be a possible short TP that you're looking at there. Now that is not even, that's a 2-to-1, that's less than a 2-to-1 risk reward ratio. So that's a huge stop. What I would be doing is I wouldn't be putting my stop there. I'd be putting it, obviously we would probably be making lower lows and lower highs on the way down. So over the weekend, let me zoom in here. Over the weekend, we're going to be seeing some, like maybe a bounce from here where we're at now, then here, something like this, and then make our way down. Then you would break it to the midline, come back up for the retest, and then drop. So my stop would go above one of these local highs here, because if we're changing market structure, you might be wrong. And obviously you'd want to put it below the one, like this one here, where you'd be breaking the value area high again. So then there's your stop above this one. You have the 3.5 to risk reward ratio, and that's an acceptable short trade to take if we see the bearish scenario start to play out. So as traders, you guys, we map out both scenarios. We're prepared for whatever happens. We make setups for whatever happens, and we don't predict. We do what the charts tell us. If we break bearishly and break back into the value area, we look for the short. If we hold it as support, we look for the long. That's the way a trader should come at the charts every single day. You make plans for both scenarios, and you trade whatever plan and whatever setup is going to be validated. Now, on that short, you're going to be looking for low time frame bear divs coming in on the bearish back test here, or on the bearish back test here, you could be looking for CVD absorption, some bearish CVD absorption. You'd have to look real low time frame for that though. Yeah, there's a few things you'd want to be looking for, but if we come back into this value area here and then bounce back up to it and reject from it, it's most likely we're re-entering and re-accepting our price action within the value area, and then you can look for lower targets. So that's my update on Bitcoin today. Not a lot happening, just this new descending channel that we're looking at. We're still following the volume levels of a few of these ranges here. And Bitcoin is still holding strong above our value area high that we broke yesterday. So right now it is looking more probable to come up to this 99.9K SFP into like the value area high around 100K, or maybe even the top of the channel around 103, 104K. So that's Bitcoin for today. Now I'm going to go into Ethereum here. And Ethereum, let me zoom out to the 4-hour chart. All right, last time I made a video on Ethereum, I had one of these little arrows, and I talked about The pitchfork band of support is still holding. You can see how well the lower part of this band was holding. It was just, we were forming the range with inside this band here, but we were not really seeing any major breaks beyond this band. I mean, we did see some here and some here, but we reclaimed it and we were just chopping within this band here, which is really good to see. It was holding a support. And then we also had our range that we could have took there. You could see we kept rejecting from the value area high of the range, but anytime we would come down to the value area low of the range, we would hold it, or the POC, we would hold it as support. So Ethereum was looking pretty strong within this same range, this same kind of time frame range that Bitcoin was in, where Bitcoin lost the band a little bit more. Ethereum held it, and now we pumped up on Thursday. Let me get rid of some of this stuff now to clear this chart up so you can see this. Yeah, okay, so we pumped up on Thursday to the anchored VWAP, the same kind of anchored VWAP. Now, from Bitcoin, it was from the all-time high. Ethereum wasn't from the all-time high, but it was from the last big local high that we had, about 4,100. And you can see every time we came up to this anchored VWAP, we would reject from it. So it's been a key resistance for us for a while. Here, we rejected from it 2 times, 3 times, maybe a front run, but 4 times. 5th time we rejected from it. Here, that was on Thursday. We rejected from that. That was also the bearish backtest of the top of the band, or it was the top of the band resistance. We rejected from it, but then we were able to pump above it. And you can see this one candle here on the 4-hour, the volume, how long and big this candle is, and the volume increase on this candle. And we pumped up really high, and we were able to break the band and hold above the band, close the daily candle above the band. And now we are seeing a confirmed breakout of this lower band of pitchfork support that we were in. So you saw the key breakout happen here. We saw the VWAP flip from and this is an anchored VWAP. We saw the anchored VWAP flip that held us 5 times as resistance. We flipped it to support. We're flipping it to support. And then we have our pitchfork band that held here. So now what we can be looking for here is our resistances. Now that we're breaking out of this band, we could come all the way back up to the midline here. And the SFP is kind of far away from the midline. So if we look at the SFP of the last highs, the liquidity grab of the last highs, the band is quite far away from it. Even if we pump straight up to it now, you know, it's a couple $100. I wouldn't be taking SFP into this pitchfork band. But we do have, if we do a golden pocket pull from these highs here, the last 4,100 highs to the lows that we made on December 24th, you can see our golden pocket is coming in right around this internal liquidity grab, which in some ways it's a higher time frame. Well, I don't want to call it a higher time frame market structure break, because really we broke market structure when we flipped this here. So, but it is an internal liquidity grab. There is some liquidity there before the last massive dump that we saw, this massive volume dump here. So there is some liquidity into a golden pocket. And anytime you can see a liquidity grab into a golden pocket, that's a decent setup to look at. We also do have, if we do a volume profile pull, fixed range volume profile, and we measure the volume of just this kind of top head and shoulders type of price action, you can see our value area high is coming in around that golden pocket as well. So that is a key resistance to be looking at. This, I would say, we could do like a box of support or resistance here, something like this here. So that would be our first resistance that's coming up here. Let me put this, let me do SFP here. All right, so that's our first box of resistance. If we do continue higher, I would probably, if we don't reject from the 786, which also you always got to look at the 786 up here. 786 is near our other internal liquidity grab, but I don't think that's much. I think this one's a better one than this one. We do have that 4-hour order block in here though. So you can see that one green candle, there's a bunch of red candles, there's one green candle, and there are a bunch more red candles. Anytime you see that green candle there, it's called an order block. So we do have our 4-hour order block resting around the 786 as well. But at that point, we would be breaking above the value area high of the range, and we would have to expect price action to continue bullishly. Really, our key level of resistance that we're going to be looking to break now is this purple box here, which is the value area high, the golden pocket, and our internal liquidity grab here. If we do break above that, then we might see some sort of rejection up here at the 786, or like Bitcoin yesterday, Bitcoin did reject from the 886, so we can look at the 886. I I don't really like that too much. I wouldn't take that personally. I wouldn't take that there. Let's look at the session volume profile here. Okay, actually, that 886 does have a naked daily up there, so let's check that out. Yeah, okay. So just like Bitcoin rejected yesterday from the 886, which was also our big range POC, we do have a POC up here, naked daily point of control in confluence with that 886. So that is a possible spot to be looking for some sort of rejection on. Now, if we reject from there, usually if you come up to the 886 and touch the 886, eventually you'll come for these highs. So even if we reject from there, you would be expecting to make a higher low. So say we do something like this, come up here, reject from here, you'd be expecting to make a higher low, maybe a retest of that value area high, and then come up higher and take these highs here. So that's what we could be looking at for Ethereum as far as resistances go. If we do, it's now, right now, it's highly, highly likely that we come up to this purple box here. It is very highly likely. There's no major levels to be looking at before that purple box. So that purple box resistance is going to be a resistance. Now, if we do reject from this resistance, you could look for a short. Maybe we do the SFP into the value area high here, which is also the 0.65 of the golden pocket pull. We could look for a short from this area. And in that case, you would be looking for a short, and your first level you'd be interested in looking at is the pitchfork band retest. Now that we're breaking this pitchfork band bullishly, anytime you consolidate in a band like this, you break it bullishly, you're going to want to look for a back test to confirm the flip of that band to support to continue higher. So you'd be looking for a short from here, and you'd want to at least TP, I'd say half of it there, because in that case, we could be seeing a higher low before we make new highs. Before we go higher. And then we could also look for, if that's the case, let's do a fib pull. We're just going to do it from like the last 4 hourly lows up here. And let's just speculate. This is a speculative fib pull, but we're going to do it to the value area high. And then we're going to turn on the golden pocket. So our golden pocket, I don't like the golden pocket so much. Let's look at the 786. Okay, so by that time, our 786 might be aligning with the bottom of the pitchfork band, which you can see the bottom of this pitchfork band held really, really well all through here, because it is going to take some time to get up there. So we get up there, we reject, maybe we come down here, bounce a little bit here, and then come down, then we would have our alignment, and then you could see that. So that's a scenario we could be watching. But right now, it's highly probable to come up to this purple box. If we reject from the purple box, we can be looking here at the top of the band and at the bottom of the band. The bottom of the band, we also have the POC of the bigger range is close by to the 786. It's actually at the 886. So if we turn that 886 back on, it's in confluence with the POC. I don't like that as much as the 786, just because if we drop to the 886, then that's highly likely that we take these lows here. Now, one thing actually we could do, we could do a different fib pull. We could go from the lows that were created up to this speculative high. Let's just say that the value area high. Let's turn on the golden pocket. Okay, that actually is much better alignment, and that's a actually better fib pull too, because it's from a swing low to a swing high rather than an internal high. I was just looking at this last impulsive price action here. That's why I was going from the internal high, but it is better to go from a swing high, low to a swing high if this is going to be a swing high. This is, remember, this is speculative because we haven't even made it up here yet. But if we do make it up to this value area high and SFP into this value area high and golden pocket and start rejecting, then a major TP level to look for a higher low would be the golden pocket into the POC of the big range, and it's the bottom of the pitchfork band. So we could do something like this, come up to that value area high, reject. We might see something like this, boom, and then we make our higher low. That would still be a higher low overall. And we would see that come into play. So if you short this, your TP would be down here. One of the TPs would be down there. Say we short this golden, this value area high touch. Now your stop is not very clear in this case. So you would want to wait for the rejection and then maybe put your stop above the recent highs. Let me look at it like this. Say we have a volume candle, like something like this. Just pretend that this is a candle here, and your candle just wicks a little bit past that high. up to here. Now, you'd see a wick there, not the box, but I'm just drawing this using my crappy drawing skills. And then you would put your stop above this high of the candle, and then your low, you would do a TP1 around here because it's also the anchored VWAP that we would be looking for a bullish back test to flip to support. And by then your anchored VWAP would be kind of starting to curve up in alignment with this pitchfork band here. So that would be a TP1 area. And then your TP2 area would be down, if you took this down to these levels here, would be a TP2 area. And look at, that's an 8-to-5 risk reward ratio. If you even did it to here, that's a 4.5 risk reward ratio. Now that is also, our stop is just speculative depending on where that candle ends. Or if it rejects right from the value area high, you could wait until the next candle closes at or below this swing failure pattern level, and you can enter on the at that right there at the swing failure pattern, and then your high would go above the highs of the candle. But that's still a good, that's a 2.63 risk reward ratio for your TP1. Your TP2 would be down here at the POC in the golden pocket, which is a 5.2 risk reward ratio. So that's what I'd be looking at. The two local trades I'd be looking at on Ethereum right now. Obviously on Ethereum right now, you can't long into resistance. We're close to the resistance. You can't long here. I mean, you can, but it's bad risk management. I wouldn't do it. Personally, I have to wait. Even if we somehow over the weekend, because Ethereum is looking strong today. We're actually doing like a kind of a parabolic pump on lower time frames right now. So I wouldn't be looking for this here. I wouldn't be looking for any longs here. We're already too late. The earliest long you could take is, say we do start to kind of just chop within this here for a little while, and then maybe we start to form a range and come back down to bullishly backtest the break of the pitchfork band. It's also our anchored VWAP there. Then we could look for a long from here and bring it up to this high here. But that, you know, even if you did that, you say you longed here, you bring it up to our resistance up here. Your stop, technically, your stop would have to go below the lows to be technically sound trade. So you could do something like this. But that, well, that's a 2.69 risk reward ratio. I don't like taking it unless it's a 3. So I would probably set my stop. Gosh, that's a tough one because you don't, if you set it here, you could run it, you could get wicked out before, and the move could still happen. So you just have to look at it. You'd have to look to see maybe we wick back down past it into the anchored VWAP, and actually by then the anchored VWAP will be pretty much right at it. So you just kind of have to look at it. You could put your stops below the lows that were made, and then you could long it a little bit later, like after you bounce and after you were up a little bit higher. So let me show you that. You could come, say we're kind of chopping in a range. We come down here, we hit down here, we come back up, we reclaim it, make another higher low on low time frames. Look at the 1 minute or the 5 minute. Like, let me make that more clear. So you come down here, you hit into this, wick a little bit past it, you come back up, and then you make a higher low here, like on a 1 minute. That looks horrible too. All right. I swear I'll get better at drawing. There we go. All right. So you would want to put your stop below this low here, and obviously your entry would be up here on this higher low. And that might be a golden pocket pull from here to here. You'd look for the golden pocket to re-enter a higher low on low time frames. This would be like 1 minute, 5 minute price action you'd be looking at. And then that is a good risk to reward ratio of almost 10. So that's what you could be looking at for the long if you're going to long the back test of this pitchfork here. Other than that, I'd be looking at this resistance here. If we break this, the midline up way higher was pretty good. And then that 886 up there. And then if we do break back down within this pitchfork band, that's a different story altogether. And let's look at that. So let's go to the 2-hour chart. Let me get rid of this. Let me get rid of this. Yeah, so if we break back down into the pitchfork, we would once again be losing this anchored VWAP and flipping it to resistance again. You'd be looking down here at this support here, this golden pocket around 33.29 to 33.50, where our POC is as well. All right, so that's my TA for today on Bitcoin and Ethereum. I hope this helps. Some altcoins are starting to look good, you guys. So we got to keep an eye on altcoin season. If this is, I do think Bitcoin still is in the process of the correction. Weekly bear divs do take some time to play out. Actually, in my comments, somebody asked me about that. They asked me, do you think the weekly bear divs are done with? And oftentimes with weekly bear divs, even to form the first hump on the weekly, it takes about a month to do. And that second hump takes about another month in between then. So it can take some time for the weekly bear divs to play out. Let's go to the weekly chart here and let's look at that. So first hump here was in March 24th, and then the second hump here was in November. So that took a long time for that weekly bear div to play out. So it can take a few months for the divs to actually play out as well to the downside. So yeah, this correction, I don't think it's done yet. I think we're in a sort of B wave, a B corrective wave, in a ABC correction, or maybe we're in a WXY correction to the downside. But I do think we're going to make another lower high and then come down and take the 91.3K lows, which were kind of in the middle of nowhere as far as major levels of support. So I hope that helps with everything, guys. Thank you for watching. Thank you for subscribing. Remember, I'm not a financial advisor and I do not give financial advice. I'm just showing you guys possible setups and levels to look at. It's ultimately up to you to click the button and to choose. Just if you are trading, use proper risk management. And thank you for everything, guys. Have a good day. Have a good weekend.